Hey guys, in this video I'm going to explain my Central Bank of India trade and I took a trade in this yesterday and I averaged it up today. So why and how the logic behind this is basically I'm looking for this is basically a pullback trade, and so the pullback was at around 50 DMA, right? So 50 DMA is a very good key moving average, and also the idea is that after forming a low here, we sort of formed a higher low, and then a very tight area right now is formed. So I will take you to the intraday time frame, which will show this thing better, right? So we were on a downtrend for I mean, this sort of a base was broken down here. So this is the base, this is the VCP base, okay. um, so contraction 1, contraction 2, and after this the price did not go up, rather the contraction broke, expansion came towards the downside, right? So after that downside, what happened was we sort of found a bottom here and an up move, and then a long term consolidation, long in the sense for this time frame. And uh, and during this time, what happened was the moving averages, which were on a downtrend, flattened, and at the right side of the base, it now has started to point up. So um, so this was sort of 44.9 ish was my pivot point, in the sense that you could see that there was a lot of highs around this area. um, Sometimes you can uh, better explain this area using rather than a straight line, a zone. So this was the zone where there was some sort of um, a resistance, right? And you could see that during between 44.75 to 43.5, there was a lot of action coming from the. You can see that this was the highest area of the volumes also. So selling, buying, selling, buying, selling, buying, right? And the base then looks like uh, an ascending triangle sort of a base. And yesterday I had a small position, some 6% position or so, around 44.3, and uh, today I had a slightly bigger position, three times of what I had here, and I was holding on to that on an intraday time frame. And when at the end of the day this sort of bigger volumes came and pushed the price above this, I decided to carry it. So right now, so yesterday the position was 44.3, and my stop loss was this low, 42.7, which was like a 3-4% stops. Now that my position size has increased, I still want to have similar sort of risk. So what I will do is I will have a stop loss slightly higher than that, around 43.4. So my stop's gonna be slightly less, around 43.5. Okay. And so both of these stops will change, and the total risk on the portfolio will be slightly higher than 1%. So zero point 0.1 from the first yesterday's position, 0.4 from today's position, and I will see how preview looks like, and if I can also change as a shift the position, I mean stop loss, right? So that's basically how I'm managing the trade, and hopefully this gets me some follow through, uh, and then uh, and then we'll see then if I can move the stops to break even.